Hello there today, viewers. On behalf of the Market 360 advisors here at Stuart Peterson, I'm Bob Davenport, and this is your Dairy Week in Review for May 8th, 2015. So let's get started by looking at how our CME dairy components settled at the conclusion of this week's trade. It was a pretty supportive week overall for the products, specifically cheese and butter. I didn't see huge price increases in cheese, but it was enough to support a nice rally in cheese futures, and that supported a nice rally in Class 3. But looking at the spot trade here, blocks settled the week at 161 1/4, up just a quarter cent on the week. Barrels settled at 162 even, also up a quarter of a cent on the week. Now butter had a big week overall here, getting close to that $2 level again, settling at 198 1/2. That's up 13 1/2 cents on the week. June whey settled at 44 3/4, up 3/4 of a cent on the week. And June non-fat dry milk settled just over 101, up almost 3 3/4 cents this week. So let's take a look at our Class 3 futures prices, and as I mentioned earlier, we saw a pretty strong week overall, seeing some big rallies in a lot of these contracts here. Now again, we didn't see a massive rally in the spot cheddar price, which is normally the culprit behind these big rallies there. Generally, you see the spot market really see a big week over week boost, but there was a lot of buying interest in the spot market, and that supported a nice rally as well. So the June contract settled at 17.36 this week. That's up 91 cents from last week's settlement. The biggest rally that we saw this week was on the July contract. July settled at 17.70, up $1.17 on the week. So that brings our 2015 calendar average to 16.86 now, with a gain of 33 cents this week. So let's get into what we did see in the spot cheese sessions here this week. Here we have a weekly chart of the block barrel average. So you can see from our lows from back in the January, February time frame, we've now come up quite a ways here. In fact, back here we were at about $1.45 a pound. Now this week, the block barrel average settled at 161 5/8. As you can see by the bar here, we did settle quite a ways off the high for the block barrel average this week, and we were only able to gain a quarter cent. But demand still remains strong in both cash cheese and butter, and that's been enough to support futures prices. This week, there was a lot of bidding going on, but there was also a lot of offering. In fact, this was the first week in quite some time that we really saw the sellers come in and offer both blocks and barrels pretty aggressively, but the buyers were right there to pick up the carloads that they were offering. In fact, we saw 30 carloads total of both blocks and barrels traded here this week, and then that's the biggest volume week that we've seen in the spot cheese market in all of 2015. So volume's definitely picking up. The risk would be if the buyers decided to step back onto the sidelines and let the sellers push prices down, we'd probably see that futures premium get sucked out of the market pretty fast. But if the demand remains there, that could support a little bit more of a rally here going forward. So switching over to spot butter and powder here this week, it was a strong week, as you saw earlier, for spot butter prices, and they are working their way back up towards that $2 level. Butter settled at 198 1/2 this week. That's a gain of 13 1/2 cents, and you can see that it is a way off its lows from back in January as well. Now powder has been the product that has really been struggling here in the spot market and was working in the exact opposite direction as cheese and butter, and that was one thing that really weighed on Class 4 prices, as although butter did help to limit the downside there. But it looks like powder is trying to turn around here, finding a little bit of support from cheese and butter prices going higher. We went through a pretty ugly sell-off there, getting down to about 92 cents a pound, down near those 2009 lows, but we were able to come off those lows here this week, with the spot powder price settling at 95 3/4 cents, up 2 cents on the week. So switching over to our second month Class 3 contract, here we have a weekly chart of the continuous second month contract. Now again, just like cheese, you can see just how far we are off of the lows from back in January. Our second month contract was down at 14 1/4, and we settled this week all the way up at 17.36 with a gain of 91 cents on the week. So we have pushed up into really the bottom end of this range here from back in that 2013 sideways trading pattern that we were in, and that's an area where we could maybe run into a little bit of selling pressure, but I think as long as the cheese demand remains strong, that should be able to support prices. Now, as you can see here, we had a pretty much straight up move here just from our lows just a couple of weeks ago. So we could run into a little bit of a correction here before that next leg up. But again, the driver behind this seems to really be the strong demand in both cheese and butter. Although the spot price isn't rallying massively, there's just enough buying demand to limit the downside there and have a lot of premium priced into these futures contracts. Now the risk again is if that spot cheddar price goes back down again 5 or 10 cents, we're probably going to see things turn around here pretty quickly. So that's something to keep an eye out for. And another big supporter of dairy products recently has been the weakness in the US dollar index. So here actually we have a weekly chart of the US dollar index. We topped out back in March here when we rallied to a fresh 12-year high actually. Now since then we've been going through a pretty steep correction. Now commodity prices tend to move inversely to the value of the dollar. So as the dollar is rallying, we tend to see weaker commodity prices, and as the dollar sells off or corrects in a bull market, we tend to see a shorter term rally or stronger commodity prices. So this is probably a big supporter of the strength that we're seeing in the dairy markets right now, because even a short-term setback like this, although it is a pretty steep setback, can cause some short-term export demand. So we can see some short-term increases in our dairy exports as the dollar is correcting. So that might be something that we're seeing right now. Pop in export demand could support prices here. Now if the dollar goes for another leg higher though, that likely will put some new pressure on dairy prices there. So the dollar's correction may not be over with, but something to keep an eye on there. If the dollar really starts to strengthen again, that could add additional headwinds to sustaining this rally that we've been seeing. So looking at the week ahead, we will have a USDA supply and demand report and also a crop production report out on Tuesday at 11 a.m. Central Time. So aside from that though, a pretty quiet week as far as dairy fundamental reports go. So we'll do a recap on the USDA supply and demand report in our next video, just touch on those main bullet points. Other than that, that's going to do it for us here today. On behalf of the Market 360 advisors here at Stewart Peterson, thanks for watching and have a great weekend.